Hey everybody, welcome to the Closing Beat. Happy Thursday. How you doing out there? Do I got something on me? What is this here? Something on a screen. I hope you're having a good day there. Happy Thursday. Welcome to the Closing Beat. We are financial advisors here at Jazz Wealth, and we like to teach. So every day we come to you, try to teach you something a little bit new, sometimes maybe advanced, sometimes a little beginner, just something that we can do to help you continue to get your dough straight. 2023 doesn't seem like it so far, but it's going to be one of those years where it's a little tough to keep every dollar intact there. So trying to help you out. And one of the things that we do is Jazz After Dark every night at 7 o'clock. We come to you, it's Eastern time, but we come to you and try to teach you something new there as well in a real laid back kind of a way. Tonight we're going to talk about brokerage accounts for beginners and maybe some things that you intermediate brokerage account users may not know. We'll cover that. And then if you're one of our clients tonight at 8 o'clock, we'll be doing Wine and Wealth, where we're going to do a official new client orientation. So we'll go over everything to expect, how to use all the tools, where you should be looking, what questions you should be asking, and kind of get you up to speed there. Last week we did Return on Capital, by the way. Turns out to be one of our more popular classes. So that helps understand better what you guys are looking to learn. So I love it. Welcome everybody that's joining us here. And I hope you'll check us out at jazzwealth.com if you're looking for a financial advisor or your financial advisor is nowhere to be found. We'll take his place. Or her. Or we don't really care if it's a robot. We'll take their place too. We are open and eager for the business, right? Growing company. Okay, well, hey, let's talk about this market. I'm sure you saw the title of the video today that sadly, this rally, as you see it, will not and cannot continue. When a market gets too far ahead of itself in too short of a time period, well, the market tends to pull back. You at least see the steam run out of it. So today, I feel like you kind of saw a little bit of that. And that was really because there was only a handful of names that were controlling what happened today. 9 points of the S&P's gains today came from Meta and their good stuff there. We'll talk about that in a little bit. 9 points of the gain came from Microsoft. So there's 18 points in the S&P's performance today that all came from two individual stocks. If you go down to Apple, 8 points came from Apple, 7 points came from Amazon, and you very quickly figure out, well, the rally today was pretty much the big mega cap stocks out there. There was officially no love in the energy sector here today. Oil was down, energy continues to pull back, and that's to be expected with commodity prices staying so cheap. We covered that the other day. No love over there. Consumer staples, really no love over there. Anything Coca-Cola, Pepsi, Philip Morris, Procter & Gamble, Estee Lauder, across the board there was no rally. So there's two sectors out of the 11 that refused to participate today. It's interesting. How does the market go higher then? Let's continue. Healthcare, no real love over there. United Healthcare, CVS, Cigna, a couple stocks were managed to give you a little bit of a gain there, but you got Humana down on the day. I think I said Cigna already, CNC, Molina Healthcare. So nothing going on there. That's three sectors that didn't rally with the market. And then you got financials. This one wasn't as bad. But financials, if you look around, Visa not participating today, MasterCard barely participating, American Express, well, that had a good run lately, so a little pullback there. JP Morgan not participating, Wells Fargo not participating, Citigroup barely participating, so financials didn't lift the markets today. I could go on and on. Is that good news or bad news? Basic materials. Well, they didn't really participate today. Today, the sector actually was down on the day. Utilities. All right, I think it squeezed out a little gain, right? Quarter point gain on the day. They basically didn't participate on the day. We covered financials. Industrials. This is the start of one of the sectors that participate. 1, 2, 3, 4, 5 sectors. That's it. And in reality, communication services did all the heavy lifting. That sector was up 6.6% on the day. Did you know that, in fact, 1/3, 34% of the entire S&P actually lost today? So you see, well, rally, oh my gosh, I got to participate in that. Not unless you were participating in like the top 10 names. If you did not participate in those names, you're sitting back going, I don't see the rally. I'm not sure I understand what's going on. It was not a broad market rally type day. This was not broad participation. This was simply a group of stocks that have had a little bit of momentum, continuing their momentum. And so very careful out there. When you see things like that, that's telling you that the stock market, let's go over here just one. Okay, let's come back to the S&P. That's telling you that the stock market is running out of steam. Only money is in the stocks that happen to move the market. The rest of the market says, we're not sure we understand why we're so strong out there, and they did not participate. So sadly, when you see things like that, the market rally temporarily is coming to an end. So just be careful there. I would like to expand on that. Let's take a look here. I talked about this yesterday. Here are, out of the S&P 500, here are the top contributors to the gains year to date. And it's actually more than this. This is actually one-day-old data. Apple has accounted for basically 12 points in the S&P. So 12% of all the gains so far this year, which is, it's only February, have come from Apple. If it were not for Apple, the market would, in fact, not be this high. Amazon, about 9% of all the gains so far this year came from Amazon, 7 from Tesla, 6 from NVIDIA. I don't have to list them all off. All of these stocks here account for about half of the entire year's gains. We talked about this yesterday. So what happens when just a handful of these decide to pull back? Statistically, after Apple has such a strong run, does it continue higher? I'll share that with you here in a second, but you got to be very careful when you see these things. We ran into this in 2018 as well, where it was really only a group of stocks. That's where FANG came from. Oh, the FANG stocks. That's because that was all that was moving. Everything else was very quiet. Another way to look at it is we come down here and we say all the other stocks in the S&P account for 50.51% of the year's gains. In fact, if these 10 names did not rally like this, the market would be half as high as it is now. Does that make you feel comfortable? Do you like feeling you're supposed to be diverse? Go out there and diversify your portfolio and stuff. You're diverse, but yet all the actions in those 10 names. So the market is forcing you to become more focused, and that is an extremely dangerous thing, I will tell you. We also color-coded them here so you could see Apple, how much of the 50% it is taking up, how much of Amazon, and so on and so on. You got to be super careful when markets do things like this. It is very, very difficult to try to navigate in the short term there. All right, if we go over to the NASDAQ here, this is the most extended, most overbought index in the short term here. All the big tech was what led the way here today. The high market cap names there, the ones that had a lot of grief and fell during the when the rate hikes started all through last year there. It's up 16.5% year to date. It is the most parabolic index in the short term. Sadly, the rally will not and cannot continue at this pace there. It is the big names, right? Alphabet, Meta, NVIDIA, Tesla, Amazon, Apple. It's just those stocks. That's what's lifting the market. That's unfortunate there. And let's put this into a little bit of perspective, shall we? Let's use some stats, because we can use the old stats here. Give me a second. We'll go like this. I want to make sure you can see the whole thing. I used our research site, and I said, well, Apple is up just over 20% in 25 days. Well, if we know Apple is moving the market higher and is one of the driving forces moving the market higher, how likely is it to continue its rally? Give me some sort of history to show that this is normal. Apple can do this. So what I did is I went to the research site, I put in Apple gaining more than 20% in 25 days, look back 30 years. So any rolling 25-day period, it's going to take a look and give you the stats there. Here's what I find fascinating. Go like this and just pop this guy right nice and smack in the middle. We can look forward and we can kind of measure the performance over the next week, 1 month, 3 months, 6 months. Now, truthfully, you could make this anything you want, but this is just what I went for this time. Are the odds in your favor for Apple to continue its monster rally over the next week? Kinda, 56.5%. I don't know. Maybe you don't like those odds. Maybe you do. Over the next month, you basically have a coin flip, meaning Apple doesn't do this consistently. It is not a surefire bet. Over the next 3 months, it gets better, and over the next 6 months, it's fine, right? You'll take those odds because the odds of you investing in the market at any given moment and having it go higher is 52%. So if you're getting 65% odds that it will be higher in 3 months, okay, that's fine. Do you buy it today? Do you race in there and buy after hours buy Apple? I don't think so, right? In the short term, what this is showing you right there is that Apple is a bit unpredictable after rallying 20% in 25 days. It's not always going to continue higher, and it's not always going to pull back. Average gain over the 1 month is just 1.64%. In other words, it gained 20%, And then over the entire next month, which really, we've only gone 1 month. So after basically gaining for 1 month, 20%, you get this little tiny gain. Some outliers on both sides, but basically, median gains 1.62%. So, let me go back over here. There we go. So is that something you want to mess with? Now, maybe not, but what does that tell you about the stock market? If Apple can be a little bit choppy inside the next 1 month time period, does that not mean that the market is going to struggle a little too? Yes. Yeah, there's no way around that. Now do that with the other stocks that just had this amazing gain in the last month and look at those as well. You're going to find the same data, that in the next 1 month time period, it's very tough to predict whether it's going to go up or down. You have a 54% chance of guessing that it will go up and being correct. So I was trying to, maybe not so clearly, but I was trying to put together that sort of stepping stone. Like, how do we look at the market and say, this is exciting, do I jump in? Well, wait a minute, what's moving the market? Okay, these stocks are moving the market. Will they continue to move the market? Do they give me anything in history to show me that this is normal? Right? Think about anything else in life. Some people don't like using the stats, but you go to the bank and you ask for a loan and the bank says, show me anything that can prove to me that you historically can pay this loan. If you're wild on both sides, sometimes you pay, sometimes you don't, are you getting the loan? Is the bank going to want to invest in you? Yeah, maybe. I don't know how they make that decision, but what we want to show is that we have a consistent time period of paying back loans, right? It's credit 101. Well, that applies to the stock market too. That's why we use stats and go back in time to see if something, not necessarily if it's going to gain and we're going to make a profit, but just to see if it's normal. If Tesla shoots up 20% in 4 days, is that normal? Most of you could probably say, doesn't sound right. I'm sure it's happened, but it doesn't sound right. But if I say Tesla gained 20% in a 1 year time period, okay, that's believable. We know it's done that, right? Now change the time frame. So going back to the markets here, the NASDAQ, the S&P, ask yourself, is what's happening now common? Is there any reason to believe that you buying right now means you will participate in a very handsome growth, position, or you will somehow be very nicely rewarded? Now, if I gave you $1 million and I said, go invest for me, prove to me that you can make me some dollars, and you bought today, you're one step away from getting fired because you can't justify it to me. There's just no reason. So with your dollars, we all likely have less zeros than $1 million. So with your dollars, ask yourself, is there any good reason why I should buy anything right here? If there is a good reason, it's not the top 10 stocks. It's something that's less interesting. I might point out, it might be small caps. Small caps are on fire, but at least at a little bit more of a consistent rate. I like small caps, so I look at this. I don't talk about them often because you won't know half the names anyways, and most people don't seem to care. But small caps are a little easier to decipher their financials. You know what I mean? There's less moving parts. You can look at their financials and kind of get a picture better than, AMD or something. Well, in the small cap space, what's happening there is there are different pockets of the Russell 2000 that are seeing strength, and then it takes a break, and then something over here, and then something over here, and something over here. So there's this big effort to get the Russell 2000 to move higher. Today, it was the small cap financials. Now, not a lot of these are great performers lately, but this is where the action was today. B. Riley, out of nowhere, was one of the best performers in the small cap 2000 today. Tiffin, I typed it wrong. Come on, there we go. No, I typed TFIN, there we go. Tiffin, gaining 10%, double digits on the day. Otherwise, not a really interesting stock. It's working its way out of the downtrend, but you can see quickly how the financials that maybe are not so popular did well. They're getting the attention. And so that's what you want to see. If we were to look at the S&P and we were to find out that healthcare was doing this, and okay, that's helping. Now healthcare seems to stop a little bit, and then energy maybe, and then consumer discretionary, and then real estate. Oh my gosh, here we go. We're building and building and building. You can get excited about that. We just proved that we're not seeing that. And that's unfortunate for those of you that have high hopes about a big rally here this year, at least in the short term. It doesn't mean the market can't finish positive. All signs point to a positive year, at least at this point. But in the short term, if you need to commit dollars right this second, you're just chasing. Right? It's a poor timing of your investment. And I know they say don't time the markets, but if you can tell that it's at least not the most opportune time, you sit back and you wait. And even if it goes a little further, you say, who is buying this? Like, who's chasing at this price, knowing that it cannot continue? So something to consider there. Hey, like I said, tonight we're going to do an orientation for new clients, going through everything. And of course, I'll do like I always do. I will go through the material, and I will stick around as long as need be and answer any question that anybody wants to ask about that, or anything that comes up. We can, talk about that as well. All right, I've rambled on enough. Let's get into some of the goods here. Stocks. So Meta, I don't need to probably tell you that they had earnings, and that's their best day in like 18 years or something ridiculous like that. Wall Street wins. That's the moral of Meta's earnings report. Wall Street won. Meta wanted to go do this thing, and they're like, it's the metaverse. It's going to be great. We're going to change our name. You're going to put these goggles on. You're going to do your thing. Wall Street said, that's cool, but no, you're not spending that much money. We're not going to invest in you. The stock falls like 74% in a year. And Meta goes, you know what? 2023 is going to be the year of efficiency. That's their way of saying, you won, Wall Street. Give us back your money. We need your money to continue to grow there. Expenses, previously, they had said we're going to be $100 billion for the year, not just like some random time period, for the year. That was on the high end. They said $100 billion. Well, they adjusted that and said maybe 85 to 95, and we'll try to stay on the low end of it. That's good news, right? People want to see that. Pretty smart on their part, in my opinion. They added another $40 billion in share buybacks. They already had 7 going from last quarter. They've already bought that back. They've got 11 billion left in their original tranche that they were doing. Now they're saying, let's do another 40 billion on top of it. Give them a little credit there. They're buying their stock back cheap. I don't disagree with that. All right, next up, you got C.H. Robinson here, transport company. Remember, I told you this would be an interesting one here. Earnings missed by almost 40%. Revenue dropped. Same kind of concept here, the year of efficiency. They're making lots of changes there and pulling back so that they can keep their profit margins. And, of course, that's rewarded these days in the stock market, so good for them. Costco, not an earnings announcement here, but my goodness, Costco. These guys just repetitively kill it. Sales up 7%. We were expecting 6. They consistently beat on sales expectations there, almost like they know the number there. And it proves that we're all out there still shopping. We're not slowing down because they're very happy. Eli Lilly earnings came out. Sales being weaker was the main focus, and if you pay attention to the conference call, they just couldn't get past that. Sales were the real surprise here. So at one point, the stock was down over 5%. It didn't finish too horribly bad. Estee Lauder, not bad as far as their earnings go. We used to own this, so I used to paying attention to this stock. The thing that changed with them is they said, okay, everything, earnings fine. Yeah, we're doing what we're doing. Everything's plugging along. However, going forward, our numbers may be more volatile, meaning they're probably going to miss sometimes and be over, and we don't have a good focus on what those numbers are going to be, so expect a little bit of wildness there. Wall Street doesn't like that. They like predictable growth. You are rewarded for predictable growth, as you should be if you're doing that sort of thing. Public company. I wish we could go public. That'd be awesome. Go public and just like do whatever that stuff is. It'd be fun. I say that, but it's probably a royal pain. I used to sit next to a guy, the previous company I worked for, and that was his job. He would help Chinese companies go public here in the States. He always looked a little stressed out. I give him that. Nice guy, but yeah, he always seemed a little. That was my desk, by the way. On this side, you had the guy that took companies public that were from China and come over to U.S. states. And on this side was the chief compliance officer. So can you imagine the exciting conversations that were had when I would sit down and hang out? Oh, man. Just lots of exciting conversation. Like, the two of the most like dry people. They knew their rules, though. They knew those rules. Hey, on the research site, Cody is going to post, he's just finding this out for the first time, he's going to post our February calendar, just like we did for January. We're going to do the exact same thing. Got it? He's got it. He's ready to go. All right, I'll take your questions here if I can answer some of your questions, and if I can't, then we'll just, admit it and get out of the way. You'd buy the stock? All right, let's just go public. You know what I mean? wonder if you could do like where we were public, but clients were the owners. And so as you came and went, you like owned part of the company. I know that's possible, but for little old us, I don't know. Eloy says, so you say not to inject new money at all or just don't chase the big gains, wanted to add utilities communication. Yeah, I'm saying if you're going to chase the index, NASDAQ or S&P, or you're going to chase those top 10 names because you see that's where all the action's at, I would be ready for some volatility, right? If you're going to say, I see utilities have pulled back in consumer staples, and I like a few names there. Okay, you're not chasing anything. There's a good chance that those 10 names just stop. They don't fall. They just stop, as if the world was frozen. And the rest of the market says, well, look, my money's not moving. I got to go do something with it. And maybe those things catch up. But yeah, I wouldn't chase anything revolving the market or those 10 stocks. Yeah. Michael Burry tweeted, sell. Yeah, well, he's always a bear, though. He's been a bear for a while. And to be fair, he was on the right side there. So I wouldn't. Are you really, you would commit your money to something because somebody sent a tweet? You bought Pfizer. Giovanni likes his options there. All right, let's see. All right, so I got your Pfizer. What was it, 42, 43? Better be at the money. Oh, good. 42 March calls. Any thoughts? You can hit 50. I think 50 is a bit of an ask by March, but I certainly see the reason for your bounce. And good job for going with the at the monies there. Ford, was it higher? I saw it shot lower there initially. It's still a little lower. Yeah. Not a great showing for them, huh? Matt says, do we need to be a client for the new client orientation? Well, yeah. If you're not a client, it's going to be awfully boring. It's going to show you a whole bunch of stuff that you can't touch. So yeah, you would. And it will be in the dojo. You just log into your portal and we'll just pop up and you see my pretty face and we'll get going. Short squeeze on Bed Bath & Beyond. Yeah, that's all that it possibly could be. You might have some people in there that really believe that this is going to work itself out, but that much money? I don't think so. Parrot Head, I do not see a post from you. I'm happy to answer. You want to copy and paste it again for me? You want to sell out of the money Apple calls with 30 days till expiration. Well, I mean, now you know. So it doesn't matter what my opinion is at this point. Now you know. Is that a stock that's likely to rocket higher, go sideways, or pull back? And I'll give you a hint. There's two good answers. Something about Tesla. I missed the Tesla thing there. You're welcome, Giovanni. What are your thoughts on AI stocks or ETFs? Is that the next thing, right? Is that what we're all going to chase now? I'm a bit of a grumpy person when it comes to this because for years I've heard them all. So 3D printing, oh my gosh, that's so cool. Let's go buy that. The meat stocks, what is it? The fake meat where they crush a plant and they make it taste like meat somehow. I don't know. That was a big thing. Bitcoin's a big thing. Maybe still be a big thing, but for a while. So we chased all that stuff. You got pot stocks. Everybody was chasing that stuff. You got the COVID stocks. Oh my God, everybody's going to work from home. Let's go buy computers and chips and microphones and all this stuff. You see how all that worked out? So AI is creeping up there in the conversation, getting a lot of publicity. Are we all going to go chase that now? How's that going to end? Why should that, and I'm sorry to sound grumpy, but why should that end any differently? Is it different this time? I thought Bitcoin was going to change the world. I thought 3D stocks were going to make it so we could just print everything that we wanted, right? Think about all those things, and it goes all the way back to the tulip mania thing. It's just happening faster these days. So that's my grumpy talk on that one. Sorry. Yep. What are your thoughts on UNH? I'll come across sort of wrong on this for a little bit because I'm a contrarian. So I like when a stock gets oversold. I wouldn't say this is just about oversold yet. It started today, right? But I get excited about that sort of thing. So my thoughts would be excited. 3D stock. Now, interestingly, IR, I'll give you that one. 3D stocks actually coming around again. It's one of the better performing areas. If you look at the sub industries there, I covered it the other day. Showed you all the different industries that were doing bad, doing great, whatever. So are we going to do that again? You know, I don't know, but they held on pretty good, unlike those tulips, right? 3D printing, 3D systems, even still. So that area, I do believe that's the best performing sub industry. If I knew what day it was that I went through that, I would just pull it up for you. But let me see. I probably could find it real quick. So that one I'm willing to give to you. Now this is old data, but check this out. Here's where we covered it here. 3D Systems at the time. This was maybe just a week and a half ago, 2 weeks. Here's your year-to-date performance on these. One of the better performing areas. That was before the value stocks all took off. But yeah, you got huge pullbacks, and now money wants to go into 3D printers. So I thought, okay, well, that's interesting. Maybe some stuff going on there. I know they've come a long way. Yeah. Costco prints money. Yeah, you can't argue with that. Like, that was very impressive to see that. I would expect that people will reward their stock price because that's crazy. Oh yeah, that's not to take anything away from the cool factor of 3D printers, by the way. I have a friend that has this. It's not your basic like at-home 3D printer. He makes like fishing lures and casts the molds for brake calipers and stuff. Oh my gosh. Like, it's come a long way, I'll give you that. There's still the little at-home fun ones that you make stuff, but yeah. So the point being, there's going to be something else. Maybe it's AI. I don't know. Maybe AI, or maybe there's some new food thing or drug or whatever. Remember COVID? It was like, you got to buy Pfizer and Johnson & Johnson and all that. Why is it always like that? You notice how there's always a hot place for you to put your money? Oh, sports gambling. Yeah. Oh my gosh, you got to jump into sports gambling. How'd that work out? Turns out there's a lot of fraud at DraftKings. Nikola, there's another one. Ooh, an electric semi-truck. Turns out they were just rolling that sucker down the hill, right? So careful, there's always something to chase. All right, I've been a little tougher here today. I'm gonna get out of the way, go get myself ready for wine and wealth. Grab a glass of wine, come hang out with me tonight. If you're a new client, I do wanna spend some time with you and make sure you're getting the most out of Jazz here, because over the last year, we got so much going on, and I want you to make sure you know right where to go, how to get the best help, and of course the tools that are available for you to use. Thank you for everybody hanging out here with us today. I appreciate it, and your consistent following and all that good stuff. We'll be back, of course, to do this all over again and even more. So enjoy. Thanks for watching. See ya.